Hello, hello. Good afternoon. Hey, Charles, how are you doing? If you can hear me, just let me know. Just give me a big thumbs up. Leave a comment in the chat. Good job. Thanks for that. And we're here today for the live trading session with IronFX. So I hope you're ready to go. We'll give it a minute or two as everyone else streams in before we get started. How are you doing today? Hope you're doing well. If you get a chance, let me know where you're joining us from. I'm always happy to see where I can see where is everyone joining me from. So I, how we're reaching out towards Finland. Wow. Super. Probably my first audience from Finland. So that's awesome. Hey, Kingsley, how you doing? One more minute and we'll start. Very good, very good. All right, so let's get started now. We are leading up into quite a big news to be released in just under an hour's time right now. So we do have today the live trading session here with IronFX. As usual, before I get started, just want to do a quick disclaimer and risk warning. Right, all products are traded on margin and carry a high level of risk. It's possible to lose all your capital. These products are not suitable for everyone, and you should ensure that you understand the risk involved. I will be looking at some trades. I will be looking at the news. I'll be sharing with you my views and opinions on what I think could happen in the markets. But remember that any information in this webinar should not be considered as investment advice or an investment recommendation, but you should view it instead as educational material only. If you are jumping into any trades, please make sure you do your own due diligence. Make sure you manage your risk, check your trade size, make sure you are comfortable with the trade you're getting into, not just blindly jumping into any trades, because you can't be responsible for any trades that you get into, whether it's from this information or moving forward. With that, just a quick introduction of the team. I do realize that my picture is not here. We get that sorted. But we have the team of analysts and traders here. So, if you are with us for the first time, faces might look new, but, I'm sure that if you keep joining onto these series of webinars, you probably get to know everyone sooner or later. So I'm Jin. Well, I'm Jin Dao. Everyone calls me Jin. I'm here to help you, share with you my trading experience, share with you how I look at the markets. And if you have any questions at all, as all of you are joining us right now, if you have any questions at all, please feel free, put it into the chat. I will be answering your questions as I go along. And, if you have any currency pairs or any thoughts that you'd like my opinion on, I would be happy to share my views through that as well. All right, so again, thank you all for joining us. Let's get started. We will be going through some live trading analysis with the Bank of England interest rate decision to be released in just under an hour's time. We might see some volatility on the pound dollar, so I'll be guiding you. I'll be sharing with you my thoughts and views through that news event as well. All right, so get that away. Again, just want to do a quick check. You can see my Forex Factory news calendar here. Just let me know. And those of you who have just joined us, drop me a message, say hi. Let me know that it's all good. All right, super. So the way I approach markets, right? The way I approach my trades, first thing I do, I always check the news, right? I'll look at the news first. I look at the fundamentals. I approach markets a little bit differently from, I think a lot of traders is that I do a combination of news events and then look at the technicals to discover, whether it's going to follow with the news event or whether it's going to go against it before I jump into a trade. So Kingsley there has a question: how do we get information on news events? What I use Forex Factory, right? So I use Forex Factory here. Oh, sure. Sorry, I'm coughing a little bit, but seems to be staying there. All right, so I'll share that with you. I use that to help me schedule or plan my trades because it gives me all the information. It tells me when a news is happening, what news is happening. So it tells you here when the news is happening. This is 7 p.m. GMT plus 8. The pound dollar with the official bank rates, it was 1.25%. They're expecting a 50 basis point increase. So they're possibly going to push it towards 1.75%. And then when the news gets released, it will appear right here. In this case, you can read more about the summary. You can look at the rates or the way it was voted, and also the reports there. So I have this open all the time. Today, we do have this big news happening. It helps me plan for tomorrow as well, because tomorrow we do have one of the biggest news with the non-farm payrolls number, the US non-farm payrolls number, 8:30 GMT plus 8. Again, that's big US employment data to be released. So I think that we're going to see markets move a little bit tonight, especially on the pound dollar, possibly sit a little bit quiet again after that, leading into tomorrow's news with the US employment numbers and the Canadian employment numbers. What do I think about Forex Street? Any site that you can find that provides you free economic calendar with a news release, timely news release, you can use that. You don't have to use any particular ones, but you can use anyone that you choose. I would always say that it's mostly free. So if you come to a point where you feel like you have to pay for it, I have tried paying for news calendars, and it hasn't really seemed to be that beneficial. So Forex Factory, FX Street, all good basis to use for your news events. I am in GMT plus 8. I'm in the plus 8 time zone. That's why my time is a little bit different to yours. You can actually change the time zone right here at the top corner there. All right. With that, I'll start looking at charts. And if you have any questions on charts on currency pairs that you'd like me to look into, I'll be happy to do that. If not, I'll get into the first one, which is the pound dollar. Just because it is 6:08 p.m. here, the news is at 7 p.m., just under an hour. We're anticipating that 50 basis point. That's always, I do believe it's going to happen. I don't think there'll be a surprise news release here. But the issue here is that because it's such a widely anticipated news event, right? This has been signaled, 50 basis point has been signaled for such a long time. It could have been heavily priced in already. Right? Could have been heavily priced in already. So we might actually see a bit of a different reaction here on the pound dollar, especially just as I was loading this up. I saw this 34 minutes ago. Pound to weaken whether Bank of England hike is big or small, some analysts are saying. So, something to think about. I see a question there on gold, so I'll get to that right after this pound dollar analysis. Pardon me again. So, what I do is, how I approach this is I'll look at the pound dollar with a possible rate increase by 50 basis points to 1.75%. expectation usually when you see an interest rate increase is for the currency to strengthen, right? You expect the currency to strengthen. And in this case, looking at the pound dollar here on the H4 time frame, please let me know if you can't see the charts, but I think should be fine. Here on the H4 time frame, the pound dollar is now trading right below that 1.22 level. All right. It's trading right below that 1.22 level. So something to watch out for. Where are my lines? 1.22 is just right there. Oops. Okay. So that 1.22 level, let me take that away. I will try not to do news trading. So the question came in is, am I trading the news? I'll try not to trade the news exactly because that would just be right over our time. We're here for an hour. And also I'm a bit cautious about showing you guys about trading news because I really feel that for most retail traders, try to avoid trading news, try to trade after the news, because what happens during the news is you'll see some volatility. If you are not super experienced with trading the news, you usually will get caught out in a bad trade. So just be extra careful when you're trading during the news event. So what I like to do, I like to prepare, especially for traders coaching. I like to prepare before the news and then look to see if there's any trades or plan for after the news event as well. So 1.22 here is a key level on the pound dollar. You can see that it was resisted quite a few times over the last couple of weeks. And also back in June where it found it as a strong support level. So with the level at 1.22, recent highs at about 1.23, just below 1.23 right there. We have the two key levels here for the pound dollar. If we do see a strengthening, a strengthening of the sorry about that, a strengthening of the pound dollar during the news release, then we're likely to see price push up towards that 1.23 level, right? So the normal reaction or the anticipated reaction is for price to push. Where are all my all right, is for price to push towards the upside. Let me find my arrows. Is to push towards the upside like that. Okay, and this could be a good trade even on a smaller time frame. If I looked at it on the H1 time frame here, anticipating the news, you could even be looking at a buying opportunity, say above 1.2215. Your take profit will be about 75 pips to the upside. Stop loss could be quite tight at about 25 to 30 pips towards the downside. Using that resistance level as a breakthrough of that resistance level. You're looking at a 1:2.5 risk reward ratio towards the upside there for the pound dollar. If we see the pound dollar move up from the news release later, right? And this approach is a little bit different. You don't have to rush into a trade. You're basically going to sit there, watch and wait for price to move up. You're looking for it to move up a good 30 pips before looking to buy in or before triggering your trade towards the upside. If we come across the event, or given that we might be coming across the event where it's a priced in scenario, a priced in scenario means that everyone is anticipating this news so much they've been buying it up already. Once the news gets released, as expected, no surprise, they might end up selling the pound dollar back down again. So for that to happen, what I'll be looking for is a rejection of that 1.22 resistance level. I'll be looking for a rejection of that level, similar to what happened here on the 3rd of August, where it rejected that level and pushed towards the downside. similar as what happened here on the 3rd of August, where it broke from that level towards the downside. What I'll be looking for in this case could be selling opportunity, say below 1.2180. So about 1.21, below 1.2180. I'll have a tight stop loss at about 30 pips, just above that resistance level. A take profit, near-term take profit level at the recent low point there at about 70 pips. You're still looking at a 1:2 risk-reward ratio towards the downside. So you don't have to rush into a trade during that news event in 45 minutes. Look, wait it out. Let's see what happens to price as it comes up to test this resistance level. If it breaks towards upside, looks like a good way to buy it up. If it hits and rejects towards the downside, could do a quick trade back down towards the recent low, yesterday's low of 1.21. That's a good 1:2. So both ways, you're looking at about a 1:2 risk-reward ratio towards the upside or downside on the pound dollar. A question, have you heard of a news feed web software known as data flash indicator? I have came across I'm not sure whether it's the same one, but I have came across a software known as data flash. So yeah, I think it might be the same one. You can use that as well. That's quite a good one. It kind of, at some news, the data flash new indicator does release news a little bit earlier than Forex Factory or FX Street. So yeah, could be a good one, but I find that the forecasted numbers differ a little bit from most other websites. So just be careful on that. Where do you get the risk reward ratio to? It's one of the features here on TradingView. So, if you just went onto TradingView and just clicked on that with the long or short position, it's just there for, it would just appear there. So it's a feature there on TradingView. All right. So very good. Keep your questions coming. I'm super happy to see the questions. So as Joel asked, the gold. So look at gold against the US dollar. All right, gold against the US dollar. I would tell you that I've been watching this. I've been watching this with a key level at 1770. All right, so let me just find my lines. 1770 there. 1770 there. Right, that was a key level I had because of what happened here in July, where it hit and bounced and came back down again. It approached that in end of July, stalled again on the 3rd of August, and now finally broke towards the upside. I'm looking for further upside. I'm looking for gold to climb towards that 1807. I had 1807, but 1807 level, right? Why there? Same thing, because of what happened here on 15th of June, formed a good support. Again, formed a relatively good support here on the 5th of July. So I'm looking for that to push towards the upside. Could gold drop down? Could gold go lower? Possible, but I think that at this point, it seems to be that upward move. If I drew that, you could see a bit of a upward channel towards the upside. So I'm looking for this to have bounced off the lower end of the support to push towards that resistance level there. So looking at more upside on gold against the US dollar. I have actually been quite keen on this because I identified, I'll go to the daily time frame and zoom all the way out that move back when gold was dropping, right? Back when gold was dropping, I was looking at, oh, what happened here? Let me just take that away. Back when gold was dropping, I was looking at this point there at 1678, where it hit that level and bounced up back in March last year. Again, in March last year, it hit that level and bounced up. Again, in August last year, it hit that level and bounced strongly up. This time in July this year, it came very close, almost hit that level, and is bouncing towards upside again. So I'm looking for a similar reaction to move first towards that 1770 level, which we have seen happen quite a few times. And then if that 1770 level holds, to push higher towards 1807, right? 1807, 1808. And if that breaks, then we could see a next upside of about 1840. So about 1840 or 1838 there, where we've seen all that reaction. You can see the reactions right across. So I'm looking for that move on gold. So Joel, I hope I answered your question there on gold, looking at further upside, especially if these support level holds, we could see gold push higher. One of the features of what could cause gold that drop and now that push back up is the dollar index. Super, right? The dollar index has been climbing. Dollar index has been climbing. That's why we saw gold drop briefly. But right now it is dropping a little bit, slight retrace. Something to watch out for as well, because a lot of people are quite hawkish, or the hawkish sentiment on the dollar has been growing, thinking there's a recovery happening already. What I'm actually looking at is a possibility of that. All right, so it's came down, hit that level, bounced back up within that range, came back down, came close, now bounced back up, could have hit that 106.70 or .80 level, and it looks like it's tracking back down again. So just be a bit careful. We might see some downside on the dollar index. If we do see that downside on the dollar, that's going to push gold further towards the upside. All right, so something to watch out for. If that dollar drops, we could see pound dollar shooting up. We could see gold coming down, and also back onto the, oops, too many analysis there. Back onto the euro dollar. It has been relatively subdued, sitting right below that 1.02 level, or 1.019 level. I'll show you just by drawing that line right across. 1.019, right? It's been trading, hitting that level, turning back down, hitting that level, turning back down, trading in a relatively tight range there on the euro dollar. If we do see the dollar index weaken further, we could see the euro dollar climb back up. I'm not sure whether it will climb all the way towards that 1.03 level, but we could see it come back and trade within that range. So we could see it hit up that way, turn back down, and continue within that range as the dollar index tries to find a clearer direction. Okay, so I'm looking for possibly that move towards upside on the euro dollar if the dollar index continues to weaken. But what you have seen here is that if I show it to you on the H1 time frame, the dollar index recently has been climbing, a bit of a downside, pushing higher. We could see this as a bit of a downside. Let's see what happens at about that 106 level. If it breaks below 106, I think we could see significant downside, right? If it bounces off that 106, we might see it break out of that H4 channel towards the upside. So, approach this with a little bit of flexibility. Let's see what happens to the dollar index, especially on the pound dollar with the news to be released soon, in just about 30 minutes time, and then onto the euro dollar as well. While you're all here, let me know, what's your favorite currency pair? Which pair do you trade the most at? Just so that I could, possibly look at that pair to help you with analysis. Let me know. And I hope you're getting good information from this session so far. If there's anything else, please let me know. If there's anything else you could suggest or want me to change, please let me know. What size of account would you recommend to start trading gold? Hey, Peter, I would say that, account sizing is a bit of a subjective question or way of thinking. It really depends on what kind of capital are you comfortable with, right? With the amount that you have, then you start looking into, I wouldn't say have an account just to trade gold. I would say that just do that based on the, have an account or account size that you're comfortable with, and then look for that opportunity across the board rather than think of an account size just to start trading gold. I would always say trade with as much as you can without being over committed. Oh, I mean, if you want to put your standard risk below 2%. See, the thing about gold, then I would need to know, are you looking at a more of a trend following or more of a contrarian view? Because I think that with gold, let's say, for example, as we look for it to push towards the upside in this case, you could be looking at, very good, I love trend following, right? Let's say at about 1774. So I'll look for it to come down, test the support level, and bounce back up. You could be looking at about a, just under 1% risk on this trade towards the upside. Very good risk to reward ratio there. So do a bit of back test. I wouldn't go full on 2% at any point. I would always throttle it down, trade it with a bit less leverage or a bit less size, just so that opportunities can happen with other pairs. You could want to jump into that. All right. Have a question there about yesterday's Fibonacci session. I think it should be uploaded soon. If not, I'll check and I'll get them to follow up on that. All right. So I know it was a really good session yesterday, so I'm sure that it will be recorded. It should be uploaded for you guys to catch up, for those of you who missed out on the Fibonacci expansion session. All right, got a question here. Trading on platinum. Oh, that's one that I would say that I don't trade. I've never traded in platinum, so that's quite interesting. Might be something I'll look at. I don't even have it on my list. All right, so that's interesting. Please, if DXY drops, then gold will buy. Yes, most often, not always, right? There could be situations where it happens with a bit of a lag. So it's not immediately that DXY drops and then you can buy gold straight away. So typically, yes, but not always immediately. And pound dollar and US CAD would drop, right? No, actually, if the DXY drops, then we're likely to see the pound dollar push towards the upside, right? If the DXY drops, that means the dollar weakens, then we're likely to see the pound dollar push towards the upside. Okay, good question on the US CAD. So if the dollar weakens, then yes. See, here we're seeing the dollar weakening. We're seeing the dollar weakening here, and with the US CAD, we've actually seen the US CAD drop towards the downside as well. Right now, testing that 1.2820 level. What I'll be looking for is if price can break below this support level. I'll be looking for, this will be a big move towards that 1.2772 support level. It needs to, however, break strongly to the downside. I would say that, let me see a way to do this. I would say that it needs to go past about 1 point. I would actually be more conservative and say below 1.28, right? It's not that far away. It's about 20 pips away. I would say I'll look for it to break below 1.28 for it to trade down towards that 1.27. Relatively small trade there. So 1.28, no, about 1.2810. Stop loss tight at about 20 pips. Take profit just under 40 pips, almost a 1:2 risk-reward ratio towards the downside. Looking at a very safe entry there. But bear in mind, this is the US CAD. If it doesn't happen tonight, if this trade doesn't happen within the next 8 hours, right? If this move doesn't happen within the next 8 hours, then I would cancel, right? Or if it does drop, but it sits around that point halfway, I will close out the trade, because remember, tomorrow we do have the Canadian employment numbers looking like it's going to have a bit of a change from a -43 to a +14, but unemployment rate for the Canadians looking to rise slightly from a 4.9 to a 5%, right? Unemployment rate looking to climb slightly. And if that happens, then we're going to see, some weakness in the Canadian dollar. For the US, average hourly earnings for non-farm payrolls, or average hourly earnings looking to stay at a 0.3%. So a small change there. Non-farm employment change, again, a small change there, not a big surprise. And unemployment rate at 3.6%, with no change expected. So I think that tomorrow's non-farm payroll is possibly going to be a little bit subdued. It's going to be a little bit subdued. Not expecting big changes in the data there, but watch out. We might see some upside move in terms of employment change. They have been quite conservative with the forecast recently, right? Giving it a chance to beat towards the upside. If that does happen, then we might see some dollar strength come back into play again. So again, coming back to the point is that, for the US CAD, if it doesn't break that support level, definitely don't sell it down. But if you sell it down, look for it to get out of the trade before we head into the non-farm employment numbers tomorrow, right? Tomorrow my time. I have a couple of questions here on the NASDAQ 100. Let me find it. All right, on the US 100. I was just looking at this earlier today, where was the level I was anticipating? Right. So I was looking at further upside. I was looking at further upside in this case, but it needed to break above that 13,425 level, just because that's what has held it from climbing further since April's hit that point, hit and resisted. I wouldn't do anything at this point right now. I was actually looking to get in towards the upside, but just to be a bit more disciplined, I would say let it break above that point before I would say this resistance would be invalid. Because of what happened here, right? So wait it out. Don't rush into it right now. Let it push above that resistance before looking to buy it up. You might have a flip side question is, can you sell it down? I'm more of a trend following approach. So with the way it's been climbing recently, I would be a bit cautious about trying to sell it towards the downside. I'll wait for it to break before looking to buy it up. All right, so DJI, that was my analysis from before. Same levels still hold. I like that I had that analysis hit, bounced towards upside, broke above that resistance. Straightforward view, same as the 100 was looking for a price to climb towards the upside to test that 33,268 level, or even at the higher range of 33,486. Right, so unfortunately, not a lot of excitement there. If you're a little bit shorter term, then I would say you could, if you're happy to take on that little bit of risk, is you could think of it as a level there. Let it break towards upside. Let it close about above that 33,000 level before looking to buy it up towards that 33,486. That could be a good short-term trade if you didn't want to wait for it to push up. I would say, break above that point before looking to buy it towards the upside. All right, again, following that trend towards the upside, just playing based off the support and resistance levels. Someone asked about Ethereum against the US dollar. Ethereum. So when I look at cryptocurrencies, for me, my approach when I look at cryptocurrencies, I tend not to look at it on the H4 straight away, right? So for Forex, for most major currency pairs, or actually all currency pairs, I look at it on H4, then I'll drill down to the H1. That's where I do most of my trades. And if not, or when there's a news, then I could be looking at the M15 or even the M5 time frame. But usually I'll stay on the H4 and then to the H1. For cryptocurrencies, what I tend to do, I look at the daily time frame first, right? So I was talking about this testing lower. Before that, I was anticipating that as a good support level. And if it did break, which it didn't, good stuff. It bounced off, but it has found a strong resistance level at that 1715 level, right? You can see that was a good support in May, a good support in June, now finding it as a strong resistance level now in July. So what to look out for here on Ethereum? I think that we might have found some short-term resistance here on that 1715 level, right? So could we see further upside? Yes, we most likely see further upside on Ethereum, but I think we're likely to see it either consolidate in this range or test down a little bit before pushing towards the upside. So what I mean by that is it's either going to sit right across or it's going to come down a little bit before pushing back up and possibly breaking above that point, right? Also, if I drew a channel across, if I drew a channel to the upside, we might see, nope, not a great channel there. So that wouldn't work, right? So I think that we might see it test that point before bouncing back up or sit right across. If it did break above that 1715 level, then 2004 might be a target, but I think there are a couple more. I don't see significant or big upside moves on cryptocurrencies. I think that it could climb up, but it would be a bit of a struggle. So I'll probably have another level at about a 2000 level, just about a 2000 level there as another interim level for it to climb up and test that resistance, which we've seen an area of consolidation here in May. So we might actually see that break up and consolidate again at that 2000 level. All right. I hope I answered your question there on Ethereum. Any other pairs that you would like for me to go through or consider? Hey, Laurie, you had your hand up. Any questions? Pound yen, good stuff. So let's look at pound yen at this point. Pound yen, well, straightforward H4 time frame first. you can see that I'll clear this out. You can see that it's been pushing towards the upside. Two reasons. The recent push is because of the pound dollar, right? Because of the pound dollar. I'll take this away. Okay. We have pound dollar pushing towards upside, but more importantly is the US yen, right? The yen has been weakening against the US dollar. We have seen the US yen start climbing from this 130.50 level, pushing up, right? And this happened on the 2nd of August. If I brought up the pound yen chart again, you notice that on the 2nd of August, that's when it started pushing towards the upside. So this is how you can tell that pound yen is really pushing towards upside because of the yen weakening against the US dollar. So yen overall weakening, pushing towards the upside, more so than the pound dollar pushing it or dragging it up. With that, with the news to be released in about 20 minutes time, again, resistance there at 166 on the pound yen H4 time frame. We are at a level right here, so I consider levels as an area. So we are at about that 163.50 level. I would say if it broke above to be extra safe, if it broke above 164, still about 50 pips to move. If it broke above 164, then we could see good, strong upward move towards 166. All right, good, strong upward move towards 166, but we do see some consolidation at about 165. Just be extra careful with pound yen. Very high volatility. You tend to see a lot of tails and shadows, especially on the pound yen. So in this case, I would say that if you were looking to buy this up, then look for price to close above 164 at about 164.30, 164.25. You could be looking at a 40 to 50 pip stop loss, about 150 pip, 160 pips take profit, a 1:3 risk reward ratio towards the upside. But I would put in a point of consideration at about 165. So you might want to consider whether you're going to close off the trade at a 1:1 risk to reward ratio. If price looks strong to push towards the upside, then you could think of it going towards the next take profit, drag your stop loss up into a protective trade. You could be looking at a break even or a small profit with that big take profit towards the upside. All right, so slightly different way to I would approach pound yen just because of that volatility. Super. Hope it helps. All right. What else? I was looking at the Aussie dollar. So I was really happy with the Aussie dollar. This was something that I found on yesterday. I saw this reversal. I said, okay, please, do you know currency index? There are a lot of index, especially, the dollar index, the euro index, the pound index. I tend to only use the dollar index, but I don't use it as a direct trading tool. It kind of just gives me a bit of a overview of what's happening, because the dollar index can move, but it does move with a little bit of a lag as well. And bear in mind, the dollar index is influenced by, or it's calculated by 50% of the 50% of the dollar index is made up of the euro, right? So of the euro. So if we see a big move on the euro dollar, that's going to happen on the dollar index. It might not be that the dollar is strengthening or weakening. It could just be against the euro. So just be extra careful when you look at the index, understand the proportions of which pairs are contributing to that index, because you might get a slightly skewed view, right? So I use it more as just to give me an overview rather than to give me a direct representation of whether, you know, the dollar or the euro or the pound is weakening or strengthening. All right. Wanted to highlight this was something that I spotted on the Aussie dollar on the H1 time frame. All right, there's a 3. Super. I'm glad you're happy. Very good. I hope to see you again. Make sure you join every session, right? Thanks for that, Joe. The Aussie dollar here, I spotted this 3 candlestick reversal pattern, a morning star, downward move, a bit of a indecision, and then a big upward move. So I highlighted that within the groups to say, hey, reversal there, possible towards that recent point. I think I even went as high as about that recent point there. So that was a good reversal that I saw on the Aussie dollar. I thought that it would turn back down, but with the way the dollar index has been moving, we saw the Aussie push towards upside. What to look out for on the Aussie dollar, I think that I don't think you'll get to that 0.7, yeah, 0.7040 level. I don't think you'll climb all the way there. I think we could see some hesitation at about that 0.7 level. So I think we might see the Aussie dollar climb up, hit that level. I'm still looking for a retrace, especially if the dollar turns back towards the upside. You can see dollar still coming down to test. So I'll be looking for this to push up. If the dollar turns up, we might see a reversal. If not, then just another quick trade towards the upside. But I think feels like it's a bit unlikely to get up to the top level there. All right. Good stuff. Anyone else? Anyone else with a pair, a currency pair? Any questions? I'll be happy to guide you through. Kiwi dollar. Kiwi dollar is a bit, that big drop there. The big drop there was because of a employment number. Then we saw it bounce quickly before testing lower again. Now pushing towards the upside. It's heavily influenced by the way the Aussie dollar moves, but the Kiwi dollar has several resistance level a lot nearer than the Aussie dollar. So I think it could go up, but possibly limited upside potential, could come back into this range or hit this 6324, 6325 level before reversing. So that will be key. This level is key. We're looking to see what happens if you can repeat that. And hey, if that does repeat, we could see a bit of a head and shoulder pattern. So I'm looking for this to go up, hit, and then turn back down. Then we could be seeing a bit of a where is it? A shoulder here. Oops, a shoulder here. And then a head here. And then a shoulder here. So we could see further downside on the Kiwi dollar H1 time frame with the formation of that. It's not a perfect formation, I'll tell you that, but it seems like that could happen, especially on the H4 time frame. Hey, let's watch out for that. Something to put on your watch list. All right. So I see a couple of you asking for Swiss franc, the dollar Swiss. Okay, dollar Swiss. Look, last time, or I've been talking about this quite a bit, hit that resistance, drop, did that again, it bounced back up. I was looking for it to break below that support, did that. Right now, straightforward, I'm looking for a repeat of, you can guess what I'm going to say already. I'm looking for a repeat of what happened here, right? I'm looking for this to push towards the downside. I think that it's a bit odd that we're seeing that much dollar weakness, right? I want to see what happens there. If that does break below that 106.10 level, we could see quite significant downside on the dollar. Should be a bit surprising with the way it's been climbing. Then we could see this push towards the downside. So don't sell it yet. Don't sell it yet. Possibly wait for this wait for this H4 candle to close off. If it does close below that point, right, below that 0.95, well, below 0.9590, then we'll start thinking about selling towards the downside. In this case, simple trade idea that I would be looking at is downside below 0.9590, about 30 pips stop loss, take profit. You could go for a 1:1, almost a 1:1, but in this case you can actually move that level towards the downside because it reacted to that support at that price level. You're looking at a almost 1:3 towards the downside here on the US Swiss franc on the H4 time frame, but it needs to come down. It needs to close below that 9590. Just be careful, might spike, especially with the way the dollar is moving, but something to watch out for. If it rejects, we can see that downward push. So far, so good. Yeah, Joe and Eric, did that coincide with your view on the US Swiss franc? You guys were asking about that. Could we see the US Swiss franc push towards the upside? Possibly, but it all depends on the way the index is going, the dollar index is going to move. If it bounces off this level, then we'll see that push towards the upper side, because there hasn't been much news coming from the Swiss, apart from yesterday's CPI data from the Swiss, where month on month there was no change in inflation. So we might see that inflation growth is slowing in the Swiss. So might not see as aggressive interest rates hikes coming from the Swiss National Bank. One reason, but I think that the way the dollar Swiss is moving is always going to be highly dependent on the volatility in the dollar index. All right. Any last ones to look out for? Okay. If not, I'll end off the session with the last two things that take that away. Messy. All right. The last two ones to look out for is Brent. No, wait. Brent crude is here, right? Right now trading at that 100 level. This big slide was because of, pardon me 1 second. This big slide was because of the OPEC meetings where they say that, hey, there might be a possibility of production increase, a small increase in production levels, more increasing supply of gas. And because of that, we saw price slide quite significantly, together with that reduced demand as the world worries over a possible recession. All right. So what I'm be looking for here in this case is further downside, but I would say that might bounce towards that 101.80 level, bounce slightly, maybe even a little bit higher there, 101.90, before returning back to the downside of that 98, maybe that 98 level, 98.50 level. So we're looking for small move up before a small retrace towards the upside before a resumption of that downtrend again. What can I say about Confluence trading? I can say a lot about Confluence trading. We'll probably have to do that in another session. But Confluence trading is helpful, right? Because trading is a lot about your confidence, right? It's about a lot about confidence. It's strategy is one thing, risk management is the most important thing, but it's about confidence. So when you put a few tools together, whether it's fundamentals or whether it's a technical tool, whether it's a sentiment tool, when you put a few together and it aligns, it actually helps with, when you enter a trade, it helps with that confidence level. So that's what we call a confluence of trading. When things align, and I don't approach it as purely a technical aspect. I'm sure a lot of people would say, fib levels confluence with other fib levels or with moving averages. That does work as well, but I add in other factors such as economic news and data, together with indicator tools on sentiment and other pairs, the correlation of other pairs, all that add to your confluence with how price is likely to move. All right, so I hope I answered your question there. Could go into a lot about confluence. Right now, we don't really have that time on that. All right. With that last one. No, wait, I want to do one more. What was the other one I want to just look at? No, I just want to do a recap on pound dollar. Pound dollar is still approaching that resistance level. So you got 4 minutes. Remember, everyone, time warning, everyone, you got 4 minutes to 7 o'clock. I will possibly end the session a little bit before 7, just so that I can jump onto my trading platform and look to see if I can get into any trades on the pound or dollar with the news release. Let me know. Hey, actually, with this, would you actually be looking to trade the pound dollar during the news release? Would you? Please make sure you do your own due diligence before you enter into any trades. Manage your risk, manage your trade size, make sure you have a stop loss, take profit levels. But would you be looking at getting into any trading the pound dollar? You're most welcome, Kingsley. I hope you had a good session. I hope you enjoyed the session. I certainly enjoyed the session very much. All righty. So any further questions? If not, I would wish you all trade well, trade safe. And if you're trading the pound dollar or the NFP tomorrow, please make sure you manage the risk. Don't rush into a trade. News trading is not about rushing in first. It's about doing that scenario planning, knowing whether to buy, whether to sell in a good or bad news scenario. All right. Thank you. You're most welcome, Juha and Joel, and everyone else who's joining us here. I hope to see you all again in the next subsequent sessions. Trade well, trade safe. Bye-bye now. Take care.